Hi guys. Today we will analyze Western Digital stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The short-term trend is positive, while the long-term trend is still negative. We need to see a little more continued positive action to open a long position. Strong support levels are around $56 and $49.50. Next strong support levels are around $47 and $41. Strong resistance levels are around $63 and $67.50. Next strong resistance level is around $72. In the last month the stock has been trading between $54.20 and $62.30 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 4.8 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since June 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 5% per year, for last 5 years. We see that the average profit margin of the stock has been around 2% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 149% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Western Digital Company: bad, average, and good. First scenario. Western Digital will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 2%. Future free cash flow to net income rate would be low, 80%. In this case, the fair value of the stock today would be $26. Second scenario. Western Digital will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 5%. Future profit margin would be average, 3%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $38. Third scenario. Western Digital will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 4%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $54. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 5.79. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Western Digital, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 8. Again, I will use 3 different scenarios for Western Digital Company: bad, average, and good. First scenario. Western Digital will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 8. In this case, the fair value of the stock today would be $28. Second scenario. Western Digital will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 5%. Future PE would be average, 10. In this case, the fair value of the stock today would be $38. Third scenario. Western Digital will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 12. In this case, the fair value of the stock today would be $50. As you can see, today the stock is overvalued, $61, even if we expect the company's high performance in future. While the company has a good profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a small growth in the next 5 years, 5 to 6% yearly. The stock has been in a downward trend since June 2021, and it can go lower, before it recovers. The stock looks a bit overpriced at the moment. I may consider buying the stock, when the stock drops to $40–45. Company strengths. Western Digital Corporation is an American computer hard disk drive manufacturer and data storage company. It designs, manufactures and sells data technology products, including storage devices, data center systems, and cloud storage services. Western Digital has a long history in the electronics industry, as an integrated circuit maker and a storage products company. It is one of the largest computer hard disk drive manufacturers, along with producing SSDs, and flash memory devices. In 2016, Western Digital acquired non-flash leader SanDisk, expanding into the solid-state drive market, hybrid solutions, and the storage systems business. Non-flash represents the greatest opportunity for the company, driven by growth for solid-state devices, while energy-assisted capacity enterprise drives will add HDD demand. The company's return on assets of 7% and profit margin of 9.5% are amongst the best returns of the industry. Its return on equity of 15% is in line with the rest of the industry. The company's credit ratings have been improving, as it pays down debt. Risks. A main risk for Western Digital, as for other memory companies, is the possibility of a general economic downturn, and a corresponding dip in demand for networking gear, related to the pandemic. The HDD and flash markets are cyclical, leaving Western Digital vulnerable to market pricing declines, that can shrink the top line and sink margins. Supply disruptions, logistics challenges and increased lead times, are creating cost pressure. Western Digital's weak position in enterprise SSDs, threatens its long-term growth prospects in flash. The risk of HDD obsolescence, if advancements in non-chip production bring the total cost of ownership for enterprise SSDs closer to that of nearline HDDs. In April 2020, Western Digital suspended its dividend. Cutting the dividend usually sends a message that a company has a strained cash situation, or a fast deteriorating operational outlook. Based on estimates for the next 5 years, Western Digital will show a small growth in revenue. The revenue will grow by 5 to 6% on average per year. Based on estimates for the next 5 years, the company will show a medium growth in earnings per share. The EPS will grow by 10 to 12% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.